Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Ashwani and Mitesh with us for BTST Calls. Ashwani, before individual stocks, thoughts on this near vertical move on the Nifty?
See, these sort of moves happen when the market wants to consolidate even further. So possibly, since we've just dropped, I think 200 points from 28,400 on Bank Nifty, I think about 50 odd points from the highs, intraday highs on Nifty. I would think that we are still in this range of 11,500 to about 11,750. And Reliance was basically the only thing that was holding up through so many days, and now that could see a sharp correction. Similarly, I would think probably the banks could see 27,800 and 28,400. So maybe you need more consolidation. That seems to be the message here. So upside again has been rejected on banks, and because of that, I think Nifty is also suffering.
By the time maybe all the coffee drinks.
BTST Calls?
See, BTST Bajaj Finance is a buy with a stop of 29.60, target of 30.20. Axis Bank is a buy with a stop of 650, target of 685. And Kotak is a buy with a stop of 1280, target of 1320.
Okay, Mitesh, your thoughts and your trades?
Yeah. So I think, we've kind of filled the gap which happened yesterday on the Nifty, but around 11,600, 580 was the last swing pivot breakout. So maybe we'll have a consolidation between 11,750 to about 11,600. Having said that, the calls which I have right now, a BTST on PVR with a stop at 1350 for targets of 1380, and a BTST on sale with a stop below 80 and look for targets of around 83. But I think sale is already trading below the stop loss level, so can be avoided.
Okay. So this is obviously a decline that's come in a little suddenly. We're 50 down on the Nifty at the moment. And the mid-cap index is also given off from the top quite a bit. Anuj, what would you say? I mean, should we read a lot into this, or maybe just some nervousness? Because let's not forget the currency is doing what it is doing. We're still looking at levels of almost 70.5 on the rupee.
Surabhi, if you take a look at the top losers right now, they have been the top weekly gainers or monthly gainers. Coal India, for example, is up 10% this month. Reliance, which is down 2%, is up 10% this month. Power Grid, which is down 2%, is up about 10% this month. Dr. Reddy's, which is falling, is up about 12% this month. Hindalco is up about 11% this month. There's fall in Axis Bank, ICICI. I think the profile of stocks is telling you that more than anything, it's just profit taking. It's just that it's happened across sectors and across variety of stocks. So that's why it looks a bit more large than perhaps it is. But let's not forget, we are still at 11,700 on the Nifty, and the mid-cap index is still in the green, though advanced decline, of course, has now turned in favor of declines.
Okay. Well, that's the market right now, but we are on now track 2, coming to you live from the Motilal Oswal Global Investor Conference. My next set of guests, Rajat Rajgaria and Sushit Batodia. Thank you, gentlemen, so much for being here, and thanks for joining in. First things first, let me actually ask you, before I get to anything else, we've been getting some corporate commentary from the conference, lots of investor participation. Just we're speaking with Samir Arora. Rajat, your sense on what companies have said so far? Because I think the one thing that sparked this leg of the rally was a great Q1, or at least a better than expected Q1. So do you think that that momentum is going to continue? Is that well and truly here to stay?
Right. So I think across the board over the last 3 days, if I were to sum up the commentary of all the companies, Q1 was great, but it also had a low base last year Q1.
Yeah.
But the underlying demand growth recovery in many of the sectors has been quite good. And I think also the recovery that you have been seeing in the cyclicals have also added to this market.
Sure.
Right. While in general, market should get worried about the way currency has behaved. Right. But I think in this round, this currency depreciation is something which is going to be net-net quite positive for many businesses.
Yeah, I was actually looking at your notes in your report. I think a large chunk of the Nifty companies actually end up benefiting a lot from rupee weakness. So, I mean, should we get worried about rupee at 70.5?
I think 70, 70 half, 71, in my view, is really not a reason to be worried about. We somewhere needed this kind of a rupee level to boost our exports, boost our industrial activity, right? The worry would be if this moves up from these levels to maybe more closer to 74, 75. That is something which probably will create more dent. But I think this 70 is really a good level as far as the earnings are concerned right now.
Okay. Sushmit, your thoughts on what investors are saying as of now, because we've been through a period where obviously domestic institutions keep buying, but foreigners have been sort of a little iffy with this market. What's the commentary that you're picking up now?
So foreign investors are a little more wary of valuation than domestic because they have options apart from India as well. So when something goes to 10 times price to book or 8 times price to book, it doesn't fit into the investment framework. Having said that, as we've seen, the markets continue to be significantly polarized, right? So we are seeing, in fact, this time around, a lot of the FI interest is in the companies which have not done so well in the markets.
Okay.
So we're seeing more interest in, 10 time, 15 time earnings companies, where the earnings growth may not be 30%, but more like 10%, 15%.
That's pretty interesting. I wonder where that's coming from. I mean, it's just they're chasing cheaper valuations. And which particular sector is this interest concentrated in?
So it's not necessarily cheaper valuation, it's relative valuation, I would say. So I think if you look at this entire PSU space, we've had significant interest from foreigners in the petronets of the world, the utilities in general. If you go over to the media, I think there's a lot of interest in the media part of the market as well. Financials is an independent entity right now in the market. Everybody loves financials, so I think financials is, even in financials, if you look at the corporate banks, the maximum interest is in the corporate bank from the foreign investors, and not so much.
Yeah, a couple of months back, who would have thought Axis Bank had fresh one-year high, so things have really changed. On that note, Rajat, let me ask your views on what you are expecting from corporate banks now. The rally has been phenomenal. Do you also believe that the recovery process is going to be actually maybe even better than what one is building in? So therefore, would you sort of look at getting even more bullish on the likes of an ICICI or, for that matter, an SBI or an Axis?
So I think there are three different reasons to look at corporate banks. First, I think last 4 years of reporting of these banks have made people forget how these banks used to report prior to 4 years back, right? I think we need to do a good job to start refreshing that memory now. Because when they move from one end of the pendulum to another, right, the numbers can look very different. We are far away from that, but I think even reversion to mean itself can bring back some of these banks to reasonably attractive return ratios. Point number one. Point number two, I think generally people are believing that the rate cycle that we saw of last 2 hikes are largely done with for the time being right now. We are not expecting any more rate hikes from now, at least till elections. And I think that the third thing is this all management changes which are happening in the whole banking system is creating a lot of talks about where to bet, where not to bet.
Sure.
Right. We had Shri Rajneesh Kumar from SBI who presented day before yesterday. We have pretty good meetings of ICICI Bank, the CEO Mr. Bakshi, many other corporate lenders who have been here. I think people are getting a new sense of excitement after meeting these guys about the growth opportunity. And while some of them may be at their 1 year high, right, they are still well below than what the markets have done over the last few years.
Absolutely.
So there's a lot of catch-up still needs to be done in these numbers.
Just my last very quick question, little short on time. You've come out with a list of 10 focus stocks at the end of the first quarter reporting season, and ICICI Bank is among them. But I want to talk to you actually about Titan and Sun Pharma very, very briefly. I mean, if you can share some thoughts here, because Pharma again has been that dark horse that finally started to run. Just your views.
So first on Titan, this is a stock that we have been quite positive for almost a year now. We have done series of reports where we think that this entire business is going to get more and more concentrated towards branded player like Titan.
But it's been getting stuck at that 900, 990 level, and then we got the management sounding a little cautious, and then, therefore.
I think investors who have been are very happy with the way it's made money in the last 2 years,
That's
right?
true.
Maybe we are used to a 10% monthly gain now, but maybe I think it's okay if the stock Look, good stocks typically tend to consolidate, right, when you don't get good news. And when you get good news, they again start going up, right? So maybe Titan is in that bracket. Second, about Sun Pharma, I think we have seen the whole pharma profit pool getting significantly, eroded in the last 3, 4, 5 years, right? At least the bad news have stopped flowing now. Currency will be some savior, right? And the base of earnings growth is quite conducive for them to deliver double-digit returns from here. So I think we are trying to be a little more opportunistic by being more favorable to pharma after seeing what has happened to IT in the preceding 12 months.
Sure. All right. Thank you very much, Rajat and Sushmit. Thanks very much for getting us those views. Well, on that note, we will take a very quick break. We're down to the last 10 minutes of trade this Wednesday. Back in just a moment.
It's been a rather poor end for the bulls, you'd have to say. After all through the day, it looked like the market is seeking higher levels. It was in a range, but not really breaking the lows. But today's been a trending lower day. From the high point, it slipped quite a bit, and especially the last 15-20 minutes have been quite brutal. Once again, it's the macro issues, deficit statements, dollar rupee, perhaps all of that, and of course some profit taking after that heady run. Amrish Balika is in our studios. Amrish, good afternoon.
Good afternoon.
The stock of the day has been JSW Steel today, now getting into the index, but 8% higher. You reckon good time to take some money off, especially if you have been long since before this move came in?
I think so, and this is what I've been talking of steel all through. And even last week I said possibly we could see one more move up, and that's exactly what we saw for Tata Steel, JSW. So I think it's time to at least take some money out if you've not taken out earlier, because I really don't see for most of the steel stocks the earlier highs which we had seen in 2017.
Okay, that's a view on JSW Steel. Some more stocks on the move, though the mid-cap market is, of course, given off from the top quite a bit. But you still have buying interest, for instance, in a future consumer. That stock's up, what, 8-9% right now on the screen? So big move on this one. Some of the tea stocks have been quite active. Jayashree Tea, for instance, is still 12% higher. Amrish, let me ask you about some of these retail stocks like future consumer, even future retail for that matter. Today, even Avenue Supermarts has had a decent session.
Right.
Would you buy anything with fresh?
Yeah, I mean, possibly from the next at least 6 to 9 month point of view, because generally if you see that in the election year, you normally have the consumers really moving up, and we have already seen rest of the consumer packs, say like Dabur or HUL, ITC, these have already moved. And I mean, we have also seen like a stock like DMart moving up in the last 1.5 years. I mean, we've been seeing new highs. But then, I mean, if you're talking of the next 6 to 9 months, I see, I mean, these two, segments like stocks like Future as well as DMart, possibly moving up either, say, around like 10 to 12% more from here because of the election year.
Okay, Ashwani, this move on Yes Bank is interesting, right? In the morning, of course, that trade played out from the lows where it had a rally. But now, once again, closing close to the low point of the day.
Well, possibly there is something we don't know. And the other thing is that, the 200-day moving average is about 335. For the moment, it's doing this 300 to about 400 type of range. It's clear that 400 has been rejected. I would think maybe if it hasn't held its 50-day moving average, you possibly have another 30-point decline, given that the market may also correct a bit.
Okay, by the way, the market might have moved slightly lower, but the index leader today, UPL, absolutely no problems there, 4% up and counting. Ashwani, you just want to quickly go over levels here. Does UPL make for any kind of a trade immediately?
UPL, you mean for the day or what?
No, I mean, if it interests you, I'm saying from for tomorrow's perspective as well. Now it's only 5 minutes to go. If it looks interesting on the charts at all.
See, it's heading towards its 200-day moving average, so that rally post that acquisition, etc., is continuing. But overall, this shouldn't be the number one stock that you should be looking for. Look for stocks like Reliance, etc., where new highs have been made, and the chances of this correction being bought are fairly high.
Okay, by the way, just look at intraday chart on Adani Enterprises. That stock's collapsing a bit right now. Of course, it had a massive rally yesterday. about 10% thereabout. But towards the end, just big decline taking place right now. Amrish, have you studied this stock? It's had a one-way rally, of course.
That's true, but then I mean, looking at the sort of issues which it has been having, I mean, like if you look at as to what had happened in Australia, and again, I mean, this company was dependent, I mean, quite a lot on the asset out there. So I really don't see this stock really shooting up too much more from here. I think it's time it corrected. I mean, after the move which you've seen, so possibly we should see decline for a few more days. But then, I mean, the stock which you were just talking about some time back, UPL, I think, I mean, the selling which we had seen in the last 3-4 months, I think it was a bit overdone. And now we are seeing this bounce. I think if one is looking at slightly longer term, it's still time to buy despite the sort of move which you have seen.
Okay, UPL, of course, up 4.5% right now. Ashwani, what's the verdict for the day then? Second time we've gone to 28,000, 400 thereabout and slipped from there on the bank Nifty, and on the Nifty also somewhere around 11,730. Is this a bit of a resistance now?
See, the message is that it has come off fairly strongly from this 11,750 and 28,400. So the sense is that maybe some more sideways sessions, the market needs to correct the overbought position, particularly because of Reliance, and then maybe we'll fix the range and again play the boundaries. So my sense is that given the market breadth, given the way stronger stocks are also now beginning to correct, maybe you could have a few sideways sessions, because the way it came off 200 points from the highs on Bank Nifty wasn't good. On the Nifty, you came off 70-80 points, again fairly sharp. So maybe some more sideways sessions.
Amrish, any view on Bosch? Great day for the stock and phenomenal run as well.
Yeah, I mean, along with the autos, I was really expecting Bosch to perform. But then if you look at, I mean, basically the last 6 to 8 months, it was a very poor underperformer. So I think it was high time that it did some catch up. And that's what we are seeing now. I'll not really be surprised if we see, I mean, levels of about 22,000, 23,000 for this over the next month and a half.
By the way, as we are getting ready for the close, let's watch out for some of these aviation stocks today. There's a lot of selling on Interglobe Aviation, and it's going to end at the lows of the day. 6% down on that stock. That's a big one. That's fallen off quite a bit. Then you have others like PTC, for instance. These have been some of the noticeable losers on the mid-cap side. Actually, just 2 to 3 minutes to go before the day closes out. So let's wind this up. Anuj, how would you read this? I mean, the index did fall off quite a bit, but should this just be seen as a one-day phenomena right now because we don't have too much evidence, or is this fall a reason to worry maybe?
The only thing is we are closing at the lowest point, but 11,710 was yesterday's low. We are closing at somewhere around 11,690 today, so still remains a decent market. Tomorrow's expiry is Surabhi, and as we discussed, I think Mr. Tulsan also had pointed this out. After a big trending sort of first part of the week, Wednesday and Thursday, you normally see some kind of call writing, you normally see some kind of eating of premium, some kind of index management perhaps as well. So that perhaps puts a bit of a ceiling in place for the market just for the near term, but still quite okay. And as we discussed, and the profile of stocks will tell you that today was profit booking more than anything else. The biggest decline or biggest drag on the market today was Reliance. That was down 2%, of course. This is after a 40% rally this year and about 11% rally this month. So that, of course, dragged the market. Coal India, Lupin, Power Grid, Dr. Reddy's. So some of the outperformers really were falling. India Bulls Housing, Yes Bank. Infosys also was lower in trade. On the way up, UPL, the stock that we just discussed, was up 5%. Bajaj Finance made a move all the way to 3,000 in trade today. State Bank of India did well, and ONGC and GAIL were higher in trade today, Surabhi.
Okay. Well, on the mid-cap side, the index has managed a green close, though, of course, it's well off the highs of the day. At one point, the index is almost 1% higher. But we've still got some winners. So let me actually start with the gaining stocks. today has been a good day for some of the consumer plays once again. So for instance, future consumer put on about 10 to 11% thereabouts. We've seen some buying come back on the tea side, I mean the non-Kerala sort of tea plays. So Jayashree Tea, of course, 11% on the higher side. Tata Metallics was bouncing around towards the close, 10-11% up on that stock. HDIL, such a high beta stock, again about a 10% up move on HDIL today. Hathway has found some sort of momentum, 9% up over there. It's not in the index immediately, and as it makes its way into the index, perhaps the stock of the day was really JSW Steel on the metal side. Let's actually just pull up some of the other metal names as well. SAIL will come up for you. Some of these names have managed to find more traction. And then, of course, wherever there is some hope that there will not be any insolvency, for example, Punj Lloyd, some of these two-digit stocks were also flying up today, so 5% up on Punj Lloyd as well. Reliance Naval, for instance, so there's still a lot of ambiguity there. Reliance Naval was up 5%. Actually, most of the ADAG group stocks, Reliance Infra, Reliance Power, most of these stocks were positive in today's trading action. If I talk about some of the other big names, we should pull up perhaps Avenue Supermarts. That's been a good mover. Bosch, about 6%, we were just discussing that. SRF has also been on the upside today. And of course, a clutch of the PSU banks like OBC, Bank of India, some of these stocks were up and about. Tata Power should be mentioned as well. That stock was up about 3%. On the downside, Interglobe, as we discussed, Adani Enterprises has lost quite a bit, 3.5% today. Weakness on Idea. TVS Motors also stands out with a decline of about 2%. So there have been, the market has had its share of losers as well. So I guess, Anuj, that for now, should we say that a day that's kind of tempered the enthusiasm a little bit?
Oh yes, but still okay, I would say, Surabhi. Let's take final thoughts then from our experts. Ashwani, of course, tomorrow morning we'll discuss fresh calls, but on the evidence of today, what would be the basic contours of trade tomorrow?
See, tomorrow what's likely is that you will have one more retest of today's high, and if you start to fail, then then that means that the range bound context is whacked and you need to sell into the rally till you reach the lower end of the range, which could be closer to 11,500, 550. Similarly, back to 27,800, 850 thereabouts. So that could happen given if rupee continues to fall and crude keeps on rising, then that can become a good excuse for a correction. And if global markets are kind of flattish, then a sideways move may not be unexpected.
Mitesh, same question to you. Looking at today's evidence, how would you sum up the day and the approach tomorrow?
Yeah, I think the intra indicators are now cooling off on the Nifty. Very likely that we have seen a short-term high around 11,750, and maybe in case it gets tested, we might not exceed it by a big margin. So the idea could be more of consolidation. The ranges, the way I would define it, would be 11,750, 760 on the upside to roughly about 11,600, 580 on the downside. So maybe a 150-point kind of consolidation might emerge. The key here would be, again, as we've been highlighting, the Bank Nifty breaking into fresh highs could possibly be triggered on the upside. So let's see if that happens in the next couple of days.
Okay, and Amrish, final thoughts with you. You did go contra on PSU banks. Now let me ask you about Power, because as this resolution goes forward, some reports suggest that maybe NTPC has got a good positioning with their balance sheet, etc. Would you look at any of the power stocks? Would you pick anything at the moment?
Not for the time being, but yes, I think if you're looking at the best in that lot, it could be NTPC and Tata Power. But again, I don't see NTPC really moving beyond that 185, 190 mark. So, I mean, looking at the sort of returns from these levels, I think there are much better picks in the rest of the market, because I clearly see that the action is would shift from Nifty to the mid cap and the small caps over the next 1.5 to 2 months. So I think there are a lot of other sort of avenues to invest than looking at possibly NTPC or Tata Power.
Well, let's get in some global market perspective then. In a CNBC exclusive, Shrikant Bhatt of Citi says that the US is currently in the phase 3 of the bull market, adds that although the NAFTA deal is a step in the right direction, it needs to be ratified.
We are in phase 3 of the bull market. Given that there are 3 more hikes, at least 3, and it seems that the markets are hinting at a 4, we still have some legs for this rally to go on. So we are overweight equities. We would like to continue to keep some exposure in equities. Beyond that, we are looking at US investment grade in the fixed income side. Sectorally, we are feeling good about technology, we believe, as well as healthcare. So these are the sectors where we believe there is value. And more on a tactical basis, the Asia markets have sold off in a significant manner, and we have a dispersion. So we believe there is value in the Asia equities as well. The resolution here, which has already been thrashed out with Mexico, is definitely a step in the right direction, but this needs to be ratified. So it's not as if it's a done deal. It does put Canada in a bit of spot to move quickly and also get the resolution in place. But a lot of balls still in the air in terms of how and when these eventually get ratified. So I think that the trade war has created a bit of uncertainty in the markets. That's pretty obvious. While there hasn't been a broad impact directly in the flows, that has impacted the sentiment. So any sort of resolution is playing to that, and that's where you're seeing the investors liking the idea of having this uncertainty being removed. Now, as regards the discussion with China, it's pretty clear that the discussion with China is likely to be a much more protracted one, and which goes beyond probably the midterm elections, because that's a much deeper issue, and hence you probably see it at the bottom of the list and the trickiest one to resolve.
Moving on then, earlier in the week, the Allahabad High Court provided no relief for power companies with respect to the RBI's February 12 circular. Now, my colleague Anshu Sharma caught up with the Power Secretary, Mr. Ajay Kumar Bhalla, and began by asking him what are the solutions that the empowered committee will look at and how many assets can actually be resolved. Take a listen.
About 10 to 12 assets were under bidding by the lenders as part of the resolution outside NCLT, and bids that have been received in many cases, and it was under discussion among all the lenders for a final resolution of some of these assets. So I mean it will be lead banks who would be able to say that how many of those could be resolved at the earliest.
But in the past, we have seen that CDR, SDR, and other means of restructuring loans have not worked, and it's been many years that these assets are still grappling with stress. How confident are you that under IBC or the solution that committee will come out with will actually help the power assets to?
See, I mean, IBC depends on who are the people who take over these assets and for how long they can hold and finally look for PPAs and all. But the High Power Committee definitely would like to address some of these issues in the sector on resolving some of their problems, because even if these assets are bought by another developer, some of the sectoral issues would need to be sorted out so that they don't go into further stress.
But how many assets do you expect will see good buyers if they go under IBC route? What is the sense that the government is getting?
There are many commissioned assets. Some of them had PPAs and some of them have linkages also. So I mean these are the assets which we expect will definitely fetch better this thing. And there were some assets which some units are commissioned and some are nearing completion. Even those assets we expect there will be takers. Of course, there are certain assets which had not taken off much on construction front. Those definitely will have to be looking forward to liquidation most likely.
Some of the key points that the committee will deliberate upon will be fuel linkage policy as well as payment security mechanism and such issues which has to be resolved. So how soon do you expect these solutions to come in, and in the long term do you expect a policy which is there long term for these assets, because these are very fragile assets in terms of fuel, payment mechanism, there is delay by the states, Coal India. So how will you ensure that there's no...
committee will have to look at these things. I mean, had these been things been so easy, we would have resolved it by now. So committee definitely, as it involves different stakeholders, including regulators. So naturally, I mean, committee will have to examine and see what best possible can be done.
Crude oil prices hold steady, the metal prices continue to hold firm, and the US dollar index is back in flavor. So there is some buying seen on that. We've seen emerging market currencies under pressure. The Indian rupee has hit an all-time lows, and we have seen the diesel and petrol prices in India at all-time highs. So quite a day, and quite a tough day rather, for an economy like India. Tom Price is head of commodities strategy, Macquarie Group, and he joins us on the line to talk about various subjects. Tom, hi, it's a pleasure to have you on the show. First of all, let's start with the metal space itself, because that has seen some buying. The global cues still not very clear, because we still are looking at the US and China trade war concerns heating up. How are you reading the whole scenario, really?
Thank you for having me on today. It's been a very interesting year in metals this year. Pretty much everything I forecast hasn't happened, mainly because something has come out of some government somewhere in the world, the US or China. So it's made the story for metals and their price performance very complicated. The last couple of weeks, you're absolutely right. We've seen stability in metal markets, trade flows and the price performance. The main reason for that, I think, is just because China and the US re-engaged on trade talks. So they've basically ignored each other for a couple of months. They've finally come back together and started talking. And that alone has basically stabilised metal markets. So the investors that were selling metals have re-engaged the market themselves, and they're holding to see if they can get some direction out of the market. And basically, if there's some sort of trade resolution, I would expect metal prices to lift from current levels. If trade conflict continues, the selling will probably continue as well in the metal markets. And the market is truly split on that basis. It's a very interesting situation.
Tom, you're right. I mean, we have seen both these major super economies do engage, but even as they are talking, we have seen a fresh list go through. There is now a deadline of 5th of September for yet another list of $200 billion worth, looking at a public feedback. Do you see another list actually going through, or do you see something positive actually come out of these talks?
It's so difficult to tell. We're just not sure. I mean, right now they have $50 billion exposed each way, so they've hit their trade flows to a total of $100 billion. That represents somewhere between 1/4 and 0.5% of global GDP growth. That's how we estimate it at the moment. If they go ahead with a much expanded tariff program for $200 billion each way, that will be a big drag on metal prices, and it would probably broaden out to take out bulk trades like iron ore and coal. I think the confidence among investors in the commodity space would continue to deteriorate, and we'd probably see general selling across commodities. It's quite a bearish outlook if they really get aggressive on these trade talks.
Yeah. So what is your sense with the kind of year that we've left behind, the second half of 2018? How does it look to you in sense of metals?
Well, what we've been saying to our investor group is if you believe trade conflict's going to continue, avoid the metals and probably stay with the bulk commodities. A very curious situations emerged this year with this trade conflict between China and the US. We've seen speculators sell metals, so that includes base metals and precious metals. But the bulk commodities, iron ore and coal, have generally held up. And that shows you that China generally supports the bulk commodities. It is heavily dependent on imports for those group of commodities. And so that's not a bad place to hide some money at the moment. For the metals, though, the speculators are basically selling aggressively in the derivatives markets. That's been the general trend for 2 months now. We've seen a pullback of about 15–20%. It's stabilised, as I said, just in the last week or so. But if the trade conflict broadens, the metal selling will probably continue. So we still see downside risk short term for metals, and the bulks will remain stable. And that condition is probably going to persist for another 2 or 3 months. And then right at the end of the year, we would expect bulk markets as well to come under pressure. And the reason for that is we generally see a seasonal pullback for iron ore and met coal going into the steel trade. That's a general situation for the steel market. It's basically reduced activity heading into winter.
Get your point clear there, Tom. I also want to understand on what the group stand really is on the crude oil prices, because that has been volatile. As I was saying earlier, India really seemed to be getting quite impacted with what's happening with the crude oil prices, and with the kind of global scenario we are in, there's not much clarity. What is the sense on this sector right now?
Yeah, that's the energy commodities, oil, gas and thermal coal and uranium have also been remarkably stable in the face of this trade conflict. The metals are down, the bulk commodities that feed into steel have been stable, and the energy commodities have also been reasonably stable. The two basic constraints on the oil markets at the moment include the US basically directing countries to reduce their trade with Iran, so basically forcing them to reduce their import flow from Iran around the sanctions imposed on that country. And the other one is that OPEC, for almost 2 years now, has been constraining their production to reduce global inventories. And that's been a really important combination of supports for both the WTI and Brent prices. It's kept them in the range of $60 to $70 for over 12 months. And our forecast at the moment is basically for the prices to remain between $60 and $70 over the next 2 to 3 years. We have a very flat price outlook with a slight bearish tilt.
We have been discussing it has been a tough day for the Indian economy, where we have seen the crude oil prices hold on, the rupee has been at an all-time lows, and petrol diesel prices are at all-time highs. Aurobindo Gayan now joins us to talk more about that. Aurobindo, hi, good to have you. First of all, about the rupee, what's your sense on that?
New low, it's really a difficult situation, but then I think we should not forget that probably looking at the dollar movement, the economic situations across the world and especially in India, so I think some more weakness is definitely prevailing in the market, and in conjugation with the technical charts, when we correlate that, we see at least 71 is something that is visible in the near term. So another 50 paisa per dollar is something that is expected, so we need to plan our strategies and accordingly. So I think rupee is looking a little more bearish from here.
All right. How are also you looking at the metal space? Because we've seen some pockets of buying, as Macquarie also was saying that the bulk commodities should be bought into. The other base metal prices can see some more weakness.
Oh yes, I think base metals per se, I think out of 5 metals we are seeing aluminium and nickel, somehow they are holding on to the gains, especially aluminium numbers if we look at it, or the inventory numbers also we look at it. I think that is something that is positive. In fact, the technical charts are also suggesting a very strong buying since it is not able to break $2,000. So I think aluminium is something looking very exceptional among the sector. And while we talk about the other metals like copper, zinc or lead, they all are predominantly still holding a bearish tone. I think I'll continue to hold a bearish view on copper per se, and it's close to $6,000 again. So we should now move on to the Indian market from the current contract to November contract, and the call that I would like to suggest here is to sell copper maybe around 432 for the November future as a positional trade, and we should see a drop of more than 2 to 2.5% maybe in a couple of trading sessions. So we should see a price target of around 420 to 23 with a stop loss of 438. So as I said, among the base metals, I would recommend buying aluminium, and in the meanwhile I would like to go short in copper, and the rest of the base metals are looking a kind of mixed kind of trend in the short run.
Point taken. Also, what is your sense on the crude oil prices now? Because we are in a range, but we've seen a gradual gain from the lows of this month for sure.
Certainly, the price have actually gained last couple of trading sessions, and it is close to the band what Macquarie was talking about, 60 to 70. I think we are on the upper side of the band and close to 70 now, around 69 plus. So I think some more gains could be seen, maybe another $1 or $2 from here. But then looking at the inventory number that is planned out this evening, and already we have seen the API number is piling up a bit of stocks in the crude oil. So I think we are thinking, since we are hitting onto the upper band of the range, so I think once the data turns out, and in case the data turns out to be slightly increase in the stocks, I'm sure we'll see price again dropping down from the higher level. So we would bet on going short in crude oil on a higher level, maybe very, very short term kind of strategy. Let's say at the Indian market 486070 for the current contract, that is September, and we should have a very small target of around 70 to 80 rupees, or maybe 100 rupees towards 4750 with a strict stop loss above 49.20. However, the international market, if we connect that, I'm sure we need to look at $70 as a key technical resistance level. All these fundamental factors should get adjusted to that level. Nonetheless, if $70 is broken, then probably we'll see the follow-through buying that has been seen. Then will continue to be there. Maybe we'll see another $2.5 upside gain in a couple of
All
times.
right. So medium term on the higher side, but for today, it's a sell call coming in from Aurobindo.